afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. Indian markets continue to trade with losses. Nifty is trading around the 11,000 mark, and losses are led by auto and the PSU banking stocks today. Oil marketing companies and other crude sensitives like paint companies and aviation stocks are leading the losses after the crude prices surged the most on record post a drone attack on Aramco's facilities. Equitas recovers slightly from the day's low but maintains double-digit losses after SEBI returned its draft scheme to list its small finance bank. And the government proposes a 20,000 crore fund for affordable housing projects, promises to contribute half of the amount. The rest will be raised from private players, but the real estate stocks are seeing a lackluster reaction. Good afternoon, Devina. Well, higher crude oil prices are weighing on Indian markets today.
Yeah, most definitely. Though the silver lining is we're still managing to hold on to 11,000, so that's probably not all that bad. You would have anticipated a sharper correction in the morning session because we opened almost a percent lower from where we've somewhat managed to stabilize. Took a dip below, but then now trying to inch and crawl our way back up. But 71 points drop is what you have on the Nifty 50, the Nifty Bank, which was the backbone of the Nifty's move last week. That too has seen some selling pressure in today's session, down 170 odd points. The broader market space, mid caps and small caps too, have witnessed some amount of pressure. So you've got about 0.2% cut on the Nifty mid cap index, but the small cap space continues to do well, and there's been a streak of outperformance that has been carried forward since the last 7 to 8 trading sessions. Coming to the heat map and what's worked here in terms of the advances and declines, you've got a slew of declines here, starting off with the BPC, which is down about 6.5%. The oil marketing companies taking a knock to the chin. IOC is also down about 2%. And then all the other stocks, including the likes of an Asian Paints, and in the broader market space, tire companies, paint companies, all of them have dipped up in the session. What's doing well? Titan has moved up another 1.5 odd percent. And then you've got the export-oriented names. So on the back of the weakness in the currency, you've got IT as a pocket that is doing well. Pharma as a space has picked up in today's session. So Sun Pharma, Tech Mahindra, and then you've got the likes of an HUL, Britannia, more defensive in nature, that's doing okay for itself in today's session, and Wipro TCS. Coming to the broader market space, and I quickly want to highlight a few other names that have managed to move around, be it on the back of news or be it on the back of volumes. Starting off first with the Prabhat Dairy. The stock's down in the session, but it's actually managed to pick up from the lows of the day. They're looking at a delisting floor price of about 63.77, which was actually a 20% discount to the traded price. Equitas, on the other hand, has been told by the SEBI that they need to reapply, keeping in mind the guidelines that have been put out. They've said that they're going to come up with an IPO by March 2020, so let's wait and watch till more clarity comes about there. And BEL, on the back of that mega order win, the stock's doing about 1 odd percent in the session. Aside from that, real estate stocks in focus, Prestige, Brigade, Soba, all of these stocks are down in the session. Government's realty push has come about, but it's just about scratching the surface, so really not doing a whole lot much for some of these developers. Oil, we've spoken about some of the oil marketing companies. HPCL not being a part of the index, they're down about 7%. Berger, Apollo's doing okay for itself, about 0.75% higher. Other stocks which have relatively moved about quite a bit include the likes of an HEG, Graphite, and Walkhart continues, comes back in today's session with a big bang, about 8.5% higher in today's session. And finally, near the 52-week highs, we've got stocks like Adani Green Energy, which is up about 11% in the session, and Astropoly, I think Astropoly Tech, that's the other one that you should watch out for. I think that's the stock that's up about 5 odd percent. It's near its 52-week high. But what we've got in terms of the more liquid universe in the futures and options space, Navneet is joining us for that. Navneet, good afternoon.
Thanks for that, Devina. Well, the higher volatility is back in the markets after today's fall that we've seen, and both Nifty as well as Bank Nifty futures are witnessing fresh positions today, maybe on the short side considering the fall. So that's Nifty futures still holding about that mark of 11,000, the spot Nifty, and the futures open interest is up about 9%. Important to watch in closing basis whether we can close above the mark of 11,000, and also the 20-day moving average, which we did breach. That was about 10,970, and the index did see some bit of buying from those lower levels. So these are the two crucial levels to watch out today. For Bank Nifty, which is trading below the mark of 28,000, that's also seeing some fresh addition. Premium, however, has come off for the futures, 9% higher when it comes to the open interest build-up. And as I mentioned, volatility is back. India VIX is back above the mark of 15. It's up 7% in trade today. On the option side, for this weekly expiry, the maximum open interest on the call side, as you can see on your screen, it is at 11,100, and on the put side at the 11,000 strike. So that's a very narrow range that you're watching out. But on the upside, 11,200 will remain key, and on the downside, 10,950. But in today's session, more of call writing has come in for strikes like 11,000 and 11,100. Both these strikes have added between 10 to 11 lakh shares, whereas the put writers ran for cover at strikes 11,000 as well as 11,050. Very quickly then, on the stock futures side, HDFC, the heavyweight, which is down and probably dragging the index lower, has fallen towards its 200-day moving average. It's not touched that mark, but it is moving in that direction. Look at the futures, 14% higher, telling you there are some fresh positions being taken for HDFC in today's trade, which is down nearly 2% in trade. Equitas is the other one, which is your top F&O loser. The stock did become a double-digit counter, but it has recovered from those lower levels today, currently trading with cuts of about 12 to 13%. Top F&O loser. Also, it's fallen on heavy volumes in the cash side, which is not a great sign. As you can see, the white line is projecting today's volume vis-a-vis the average volume of last 20 sessions. And also on the future side, let's pull up that as well. 30 to 35% higher OI build-up, telling you at every level now there is fresh shorting seen in this counter. Colgate-Palmolive, surprisingly, has risen the most in last 9 months. A good move comes in on good amount of buying as well, because the volume on the cash side is pretty high. Last when I checked, that's the white line projecting today's volume, comparing it to the average volume of last 20 sessions. So it's always a good sign when the stock goes up on good volumes as well. And futures are witnessing fresh longs as the open interest has surged about 13 to 14% for this stock.
All right, and in fact, we'll get in Agam to talk about this a little bit more with the new management at the helm. What is the way forward for Colgate-Palmolive? But eyes on what's been happening on a more immediate basis, and the big news on the screen has been crude oil prices, which has jumped the most ever this morning after drone attacks hit Saudi Aramco's largest oil field over the weekend. The attacks have hit supplies and hit around 5% of daily global supply. Bloomberg News spoke to Secretary General of OPEC just a short while back to find out what the Oil Producers Association has to say about the attack. Listen into a small slice of that conversation.
Yeah, thank you very much for having me. We in OPEC, as you would expect, are monitoring very closely developments since Saturday in the Kingdom of Saudi Arabia with great concern. However, we are pleased that the Saudi authorities and Aramco in particular have risen to the challenge, and the way and manner in which they have handle this development is commendable.
Are you in touch with the Saudis? What's the nature of your conversation been?
They are focused in ensuring that security of supply is addressed. They are working around the clock to restore at least some of the lost supplies. They have reassured their customers. We have not had any force majeure so far. They have ample supplies in inventories that they are going to tap into. So by and large, I think they have contained the situation so far, but we are waiting for the regular updates that Aramco will be informing the market.
Good morning, Mr. Burkindo. It's Anne-Marie Hordern here. Thank you so much for joining us. As you say, the Saudis there's been no force majeure, but at the same time, they are telling some customers that they'll have to buy different grades of crude. Is that worrisome for you and from a market standpoint?
No, not at all. It is not unusual. Sometimes due to operational reasons or even requests from customers, the quality may change from time to time, and that does not translate into a force majeure. It is highly commendable considering the magnitude of this attack. As you said, the worst in the history of oil, and yet the kingdom is strong and firm on ensuring that all their customers remain fully supplied. They have not issued any force majeure. They are mobilizing their stocks, their inventories, both within and outside the country in different locations. and they have been in touch with us as well as with other member countries. So by and large, I think the situation is under control.
I know you're in Baghdad. You attended the Iraq Energy Forum. At the last JMMC just last week, Iraq and Nigeria, they finally promised to implement their cuts. Given the situation now, does that mean that they could pump at will and not have to comply with those cuts they promised they would see?
I have had a series of meetings with the leadership here in Baghdad, and they have reassured me that they will remain faithful to their obligations as eloquently put forward at the 16th Joint Ministerial Monitoring Committee in Abu Dhabi a couple of days ago by Minister Khanir Al-Gabban. So there is no unilateral action that will be taken by either the Iraqis or Nigeria, of whom both have been in contact with.
What does this mean for the overall OPEC Plus deal? We have prices soaring, we have lots of lost production. Does the deal need to be reframed?
At the moment, we remain focused on ensuring that security of supply is guaranteed globally, and to stability of the oil markets remain firm. Of course, as expected, there's a lot of volatility in the market. The rally this morning in Asia and now in Europe and the US were not unexpected, but we remain focused that stability is returned as quickly as possible, and supply is guaranteed to all markets, and oil remains a reliable and dependable source of energy.
All right, the OPEC Secretary General, they're not very perturbed about what has been happening and saying the situation is under control. But let's also get more perspective on this with Mriganka Jaipuria of S&P Global Platts joining us right now on the phone line. Thanks very much for joining us, Mriganka. You heard, the OPEC Secretary General. He said things are under control. Supply is not going to be a constraint, and there will be use of reserves if required. Do you feel that this could probably lead to some stability? Because we've already seen crude oil prices coming down from the highs of the day.
Absolutely. I think the first thing I would like to say is that there is no immediate supply risk. Saudi Arabia has assured all of its oil customers that it will be meeting its export commitments from stocks, even if it's not able to resume production straight away. If you look at the stocks at the top Asian oil buyers that import crude from Saudi Arabia, stocks they do have ample stocks, and Saudi Arabia holds stocks in Japan, so it's easy for Saudi Arabia to supply its Asian customers from the stocks that it holds in Japan. So there is no immediate supply risk. What we are waiting for is an update on the extent of damage, the duration of the shutdown, because that could change things significantly. If it is a prolonged shutdown, what that means for the markets could be very different from where we are sitting right now and seeing what's happening. The other thing that is extremely significant is the geopolitical risk premium that is now going to play into oil prices. Over the last few months, the market has overlooked this geopolitical risk premium. Focus has been entirely on demand growth concerns. But with an attack of this scale, an attack on what is considered to be one of the world's most secure sites, and the significance of the attack in terms of the processing plant processes 7 million barrels per day. It is Saudi Aramco's largest oil processing plant. The Khurais oil field is the second largest oil field in Saudi Arabia. The extent and the significance of the attack is very high, and the impact geopolitically on oil prices will be quite high going forward.
For India, Saudi Arabia, I think, accounts for about 15.6% of the overall consumption. Middle East as a whole accounts for about 53.6%. So in light of that, there is enough and more from an India perspective in terms of supplies, right? And we've been hearing conversations from major oil marketing companies here in India, considering we're the third largest importer of crude oil. It's crucial to see whether our supplies are intact.
I think for India, right away, the concerns are not. India has diversified its supply sources quite significantly. I mean, Asia as a whole has diversified supply sources quite significantly. So for now, the concern will be more in terms of the impact on prices, because as prices go up and you're facing a not so strong economy, it's not going to be good for the economy and what that means for demand and so on and so forth going forward. But the immediate supply side concerns would not be too high at the moment simply because of the diversification efforts and the fact that India can still buy oil from South American countries, from the U.S. And, the Indian refiners have been trying out a variety of crudes at their refineries.
Just one last question from my end is, where do you see oil prices stabilizing? I mean, do you see them, hover around $70 per barrel for the near term, at least till some more clarity comes about with regards to when production can actually start from the Upquip facility?
Yeah, I think, Platts Analytics is expecting prices to be in the high $70s. And the reason for that is also we are entering a period of balances tightening. With IMO 2020 coming up, demand for crude is expected to go up. So we're generally entering a phase of tightening balances, and then to have this sort of a supply disruption. And like I mentioned, the geopolitical risk premium, I mean, this just goes to show how vulnerable Middle East supply can be and how quickly spare capacity can get eliminated. Platts Analytics estimates spare capacity to be 2.3 million barrels per day, and of that, 1.6 million barrels per day sits in Saudi Arabia. So we are expecting to see the geopolitical risk premium come into prices. So we're looking at about the high $70s as we go forward.
All right, we'll leave it at that. Thank you so very much, Mriganka, for joining us. Appreciate you taking out the time.
Thank you.
All right, so it's more about clarity coming in on when production can actually start. But so far, everything seems to be under control, and no one's too perturbed by it because supplies may not stop.
True, and we've seen the prices also, which open futures 20% higher. They've cooled off, but the risk premium definitely for oil will continue to be on the higher side. Let's discuss some more actually global cues aside of crude with Arnab Das, who is a global market strategist at Invesco. Hi, Arnab. Good afternoon to you from India, and thanks a lot for joining us today on Bloomberg Quinn. Well, crude's been hogging the limelight since morning here, and considering how important the prices of crude is for India, considering we import 80% of our requirement. But there's lots more that's lined up, Arnab, for the week. We've got the FOMC meet where the economists are expecting a 25 bips cut. A lot of cues coming in with regard to the US-China trade war. Let's see what happens come 1st October when the negotiations take place once again. So what's your prognosis, what's your assessment to what's happening with the world right now, especially with regard to global equities?
I think that, we've had the global economy and the global financial markets buffeted by a number of shocks and quite a lot of uncertainty. And in the last week or so, there have been some efforts to address, or at least in the short term, improve some of these uncertainties. And there seems to be a bit of a rapprochement developing between the U.S. and China, not to escalate further, maybe come back to the table with, let's call it more concessions on both sides, maybe so a bit more of a reprieve kind of environment that should help alleviate some of the uncertainties in the short term, maybe not in the long term, but in the short term. So that should be positive, and I think it's already being reflected in a bit of a recovery in risky assets, including equities, and a bit of a sell-off in government bonds. Of course, all prior to the oil shock that is just taking place now. I think if we step back, right, what's really going on here is that there's a lot of uncertainty that is affecting trade, that is affecting investment, and that's affecting the manufacturing sector in the global economy. The consumption and services sectors in most places still seem to be holding up relatively well, although there are some spillovers. So the impact of all of these things is decidedly a drag on global growth, and that's why we're seeing many of the major central banks shifting from normalization towards more easing. And I think we will see more of that continue over time. And possibly fiscal policy will eventually come into play as well.
Arnab, so in light of this easing of policy, which we've seen from most of the banks worldwide this year, we've not seen much of a risk-on trade, especially the sort of uncertainty that you highlighted, which we've seen for global equities in the last 2 to 3 months. As a result of that, there's been more money which has been flowing into safe haven assets like gold. So do you feel for the remainder of this calendar year, this uncertainty will continue and the trade on the equity side will be risk off?
I wouldn't be so sure that it'll be completely, one-sided and be risk off. I think our view would be that it makes more sense to be somewhat diversified rather than heavily concentrated in, so-called safe haven assets like bonds or gold. The valuations of bonds is already very rich. Which speaks to a lot of this uncertainty, being at least significantly priced in, maybe not fully priced in if there are more bouts of uncertainty. There's obviously a meaningful risk of a significant slowdown or even recession in the U.S. Or global economy. But that's not our central expectation. Our central expectation is that the stimulus is coming through, will come through, will help cushion the downside. There probably won't be a significant synchronized rebound in the global economy like in 2017. So on the other side, it probably doesn't make sense to be heavily invested in, over-invested, let's say, very heavily overweight in equities or emerging markets or corporate bonds, especially high-yield bonds, because the growth rebound is unlikely to be strong, unlikely to be synchronized like in 2017. But the stimulus should help cushion the downside. So the most sensible thing to me seems to be, to be diversified rather than too heavily risk off or too heavily risk on.
Sorry, Arnab, if diversification is the call, will India as a country will feature in the diversification list? Because we've been underperforming at least for the last 2 months. Foreign investors have been selling in the last 2 to 2.5 months. And one were to look at the economy, the GDP growth is also not looking great. We're at almost 25-quarter low. So in the EM basket, where does India stand right now?
Well, I think if you look across emerging markets, you have a number of countries, including India, where the so-called idiosyncratic or country-specific stories do not seem to be that great. And indeed, the shine has come off India quite a bit in the last few months, with the economy slowing down significantly, with a bit of a concern in the international marketplace that the Modi government, after the landslide victory, is focusing on nationalism rather than on reforming the economy. I think to have a change in sentiment and a change in the flows vis-a-vis India in particular, we'll need to see the government continue to take more measures that help to support the economy, both cyclically short-term and more importantly, structurally long-term, right? The Modi government needs to go back, I would suggest, to its roots of pursuing much more significant big-ticket, reforms in the economy. Labor reform, land acquisition, these kinds of things. They can be promoted to some extent through competition between the states. But I would suggest that if the federal government takes the lead and shifts the focus in the marketplace from these movements that are seen as, somewhat nationalist or somewhat geopolitically risky, towards measures that are clearly oriented towards restoring growth momentum, which has slowed significantly, then the India story will become very attractive in a world that is starved for growth and reform.
Right. Arnab, good afternoon. And one last question would be with regards to where does the India story stack up in terms of an equity market investment within the EM basket? I mean, there are better options. Consensus is tilted toward a country like Japan, China too. Now that they have opened up the market, there's no limit to investing in equities. That too could likely see a flush of inflow. Where does that leave India then in terms of the pecking order?
I think that is a factor that is taking place, and India is being affected. Not just India, other major emerging markets being affected by the index inclusion and the liberalization in China. There's a bit of a flow out of other markets, including India, into China, both in equities and in bonds, because the bond market is also being opened up in China, much more so than in the case of India. I think we should see that as more of an adjustment a one-time rebalancing in globally benchmarked portfolios, which has to take place. And once that is done, the focus will turn back to the traditional issues of growth and inflation around the world and in the major economies, including India, and what's being done on the reform front. So I would, pay attention in the short term to this index issue and the rebalancing associated with it. But really, I would keep my eye on the ball here, which is about growth and inflation cyclically and about reform to generate growth domestically in a world that is much more challenging than when the Modi government took office originally in 2014. Right? It's a much more challenging environment. So all the hype associated with Make in India, with the need to generate 1 million jobs a month, it's no longer about slogans. It's about getting real here.
Waiting for things to shape up on ground as well. Arnab, thanks very much for joining us. Really appreciate you taking out the time.
My pleasure. Thanks for having me.
All right, moving on then. Let's begin with the newsmakers of the day. Colgate-Palmolive's new managing director has listed 4 ways to regain lost market share. The strategy reset comes after Patanjali throttled the dominance of market leaders with Ayurvedic toothpaste. Agam Vakil is joining us to take us through the 4-point plan. Agam.
Right, so let me start by talking about the focus, where the focus is going to be for Colgate and its new leadership, specifically Ram Raghavan, who's recently taken over as the managing director. The focus is going to be on regaining a lost market share as well as driving revenue growth, which has been quite subdued. Now, in terms of market share, we must remember that the company has lost as much as 600 basis points over the last 4 years, even though it has settled just slightly above the 52% mark over the past 4 quarters, and that fall in market share has been arrested. The immediate priority for the company is to regain the lost market share on account of the entry of Patanjali, specifically Dantkanti, as well as several other competitors, specifically in this case HUL and Dabur. Now, we also know that the company has only grown as much as 3% on a CAGR basis over the last 3 to 4 years, and that is something the markets have not been enthused with in general, and that is something that the company wants to address. So how is it going to go about it? Focus on naturals, specifically its Ved Shakti brand. Secondly, building on the children's toothpaste and children's category, and building a loyalty program right at the grassroots levels. They're also keeping an eye and focusing on building on Palmolive. That's the personal care brand, which has taken a little bit of a backseat of late, but it is now going to be back in focus. And of course, most importantly, perhaps, is the communication of brushing teeth on a regular basis. There was various data that the management had presented, and they are working on not just marketing but also communications, and that is something that they're going to take into consideration going forward in terms of strategy for Colgate-Palmolive.
Okay, Agam, thanks a lot for bringing all those details with regard to Colgate. The stock's seen a good move today. But moving away from that, SEBI returned the draft scheme for listing of Equitas Small Finance Bank, advising the financier to submit it again after ensuring compliance with the norms. Meanwhile, RBI did release draft guidelines for on-tap licensing for small finance banks, which means more competition for them. And we've got Shefali Malik, who joins us, who will tell us how the brokerages are reading these developments. Shefali, over to you.
Well, 2 things. So first, SEBI returning the proposal by Equitas, that is clearly a negative. But even that, some of them are saying that that's actually priced in. And RBI's guidelines for the draft regulations for the new small finance banks, that is being read differently by different brokerages. So first, starting with MK, they are saying that the small finance bank listing and the promoter holding guidelines largely remain unchanged, and the full promoter exit after completing the 5-year lock-in period will be at the discretion of the regulators such as RBI, SEBI, etc. So that makes a hope of relaxation in the guidelines, allowing the collapse of holding company structure totally go away, and it's clearly a disappointment for Equitas and Ujjivan shareholders. Now, the guidelines for the licensing of Equitas and shareholders, which were earlier there when these banks were given the license, to start the banking operations. Those guidelines were always set in clear, and RBI time and again has reiterated the same guidelines again and again. But the only expectation was that if the guidelines for the new small finance banks are any softer than the earlier guidelines, and probably that may open up the room for the guidelines for Equitas and Ujjivan also to be relaxed. So that is why there is a disappointment on that front. Equitas also put out a note, and they're saying that no further clarity on reverse merger in draft for on-tap guidelines is a clear negative, and hence they're downgrading Equitas to reduce, and the target price has also been cut to about 105 versus 170 rupees a piece earlier, and they're retaining a sell call on Ujjivan, target price 250 versus 200 earlier. Nomura is saying that listing via IPO for Equitas, something which that now that'll be their plan of action. That is a clear, that is something that is actually priced in terms of the share price. No clarity on reverse merger or promoter exit is a negative according to them. Fundamentally, as far as the business is concerned, they're actually positive on Equitas, given the ROA expectation of 2% by FY21, and they expect the holding company discount to increase with the latest development. Only Investec and Kotak are reading it differently. So there is one particular statement in the new RBI draft regulations that whether a promoter ceases to be a promoter or could exit from the bank after completing the lock-in period of 5 years would depend on the RBI's regulatory and supervisory comfort or discomfort, and SEBI regulations in this regard. So Investec thinks that RBI will allow a merger based on this particular statement between holding company and the small finance bank after completion of 5 years. And for Equitas separately, or with regards to their listing, they think that the holding company discount is arbitrary. There's no way to actually value that, but still they're downgrading the stock to 140 versus 190. Kotak thinks that they don't see the RBI guidelines as a negative for Equitas and Ujjivan, and they're saying that RBI guidelines do not provide full certainty on whether the promoters will be allowed to exit after 5 years. It does, however, provide likelihood for the same. So that's what brokerages are making out of the RBI's guidelines for the new small finance banks.
All right, Shefali, thanks very much for that. And we've seen Equitas taking the knock in today's session. The other stock that's probably pulled back a bit and actually regained some lost ground has been Prabhat Dairy. Last year, the stock listed, I think, somewhere in 2015. Now they're looking at delisting the company, and the floor price at a 20% discount to the current market price, so around 63.77. Let's quickly take a look at the journey of Prabhat Dairy. Navneet is here to take us through what the stock has done in this period. Navneet.
Thanks for that, Davina. Well, the journey has been full of ups and downs. And to start off with the IPO period, which came out in September 2015, that did not start off on a good note because the IPO itself was undersubscribed. And in fact, they had to extend the issue date as well. Not only that, in fact, if you look at the IPO, the issue price was, the stock, by the way, this year is down about 15 to 16%. And if you look at the IPO price, issue price was at about 115. So currently, the stock's been trading below its issue price. They did extend the issue period. Not only that, the price band was also revised downwards. Initially, when they came out with the IPO, the band was somewhere about 140 to 147, which was later revised to about 115 to about 123, and the issue price was at a lower price band. So September 21st, 2015 was the time when the stock got listed. It just listed with a premium of about 4%. So if you look at the performance since then, how the listing journey so far has been. So when it listed in 2015, probably if you applied in this IPO, you may have received returns of 25% just in the first year itself. In 2016, however, the stock was down 31%. Now, this is the year 2017 when there was some bit of action seen in the stock, and a lot of retail investors were drawn towards it because the stock gave you returns of 126%. But from there on, it's been a journey downhill for them. 2018, it fell about 58%. In 2019, where a lot of developments have come in for the business, the stock so far is down about 16%. So what have been the developments? Before that, let me tell you what have been the highs and the lows. December 18, 2017, it touched highs of about 257.9, and the low was seen this year on February 6th of about 47.1. And high-low ratio, I don't know how much that matters because it also depends on when exactly you entered into this share. But going ahead, what are the developments? Key development came in at the start of this year when the company sold its dairy business to Lactalis subsidiary in India for about enterprise value of about 1,700 crore. Now remember, dairy business contributes about 90% 98% to its revenue, which meant the shareholders who would have applied in the IPO, probably they wanted to buy the dairy business, but that's been sold already. And it also said the cash which comes on the balance sheet of the company, the distribution will happen to the retail investors as well. So how will the company go ahead and distribute that capital? They have only two options. A, they declare a dividend, special dividend, which they did not do. Now remember, there's a dividend tax of about 20%, which is to be paid by the promoters. They took the other route, buyback, and it's not a normal buyback. They've also said they will be delisting the company post this buyback. And yesterday itself, the company came out and said the floor price for this buyback is about 63.77. So the second route which they've taken off about buyback. Now there, if you have any capital gains from a shareholder's perspective, that is to be paid by the shareholder and not the company. So it remains to be seen whether promoters will gain because of this. 63.77, remember, this is a floor price. So if you're a shareholder, you can also tender the share at a higher price. The discovery price will come in later because it's a book building price. What does all this mean for a minority shareholder, probably who would have bought the share in the IPO or probably sometime later, maybe in 2017, when the shares were trading at levels of about 250? The main business was sold without an open offer. What does that mean? Because the main business was sold via a step-down subsidiary of the company, which also means the promoter stake in Prabhat Dairy was not sold. So that's still intact at about 50%. Had that happened, company would have got on board an MNC player like Lactis, and if the shareholding would have exceeded 25%, they would have to declare an open offer, which would have also meant if the existing shareholders are not happy with the new promoter coming in, they would have tendered their shares. But that did not happen at all, which means the minority shareholders were not given that option. The floor price, interestingly, which has come in at 63.77, it is at a steep discount of 20% to Friday's closing. Now remember, of course, you can tender your shares above that as well. And if you're making money into this transaction, now remains to be seen with the book building process and also the sort of taxes that you will have to pay on this particular transaction. With that, it's back to you, Davina.
All right, that's Prabhat Dairy for you. The stock in today's session, decent enough comeback from the lows of the day. The stock, I think, it opened was down quite significantly, and from there on, you've seen the stock picking up. So now down just about 3.5%. Getting back to the markets and what's been happening out there, you just want to take a look at the movers in the broader market space because, as we've been seeing, small caps and mid caps are doing relatively well compared to the large cap index over the last few trading sessions. Some gains in the stock like Equitas, which is up about 15.5% in today's session. Then you've got Rain Industries, India Bulls Ventures, heavy gains coming into these stocks as well, 10% for them. You've got HEG and Graphite India, both of these stocks, heavy gains. Walkhard comes back in today's session. And ITDC in today's trade again, a very sneaky move on this one, about 5.8 odd percent. The last 7 days gains now for ITDC tally to 71%. The last 7 days. So you can see the movement of this stock and from where to where this stock has come, 282. Ajit Mishra of Relegate Broking, he's joining us on the show right now. Ajit, thanks very much for taking out the time. Let's talk a little bit more about the index and, where would you place your trades?
Thank you, Divina. And see, basically, Divina, we have hardly seen any movement in the index in last 1 month. It's broadly in a range. And again, we are closer to the upper band of the same. So again, in the last trading session, we saw that Nifty closed closer to around 11,100 mark. We were anticipating it could inch higher this time and break out this zone. But unfortunately, it opened lower today and still struggling. So what it indicates is that we may continue to see further consolidation in the index in the near future. So considering that, it's advisable to create shorts because we are closer to the upper band and the risk-reward ratio is favorable. So for the index, closer to around 11,000 mark is the level where one can go short in Nifty, with 11,100 is stop loss and 10,800, which is the lower band of the same, being as a target.
Okay, so that's Ajit's strategy on the index right now, but let's also bring in Himen Kapadia of KR Choksi, who's right here with us in the studios. Himen, for the longest time, you've been looking at either out-of-the-money options in order to trade in this sort of volatile market. After Friday's pullback and a sharp pullback that we saw, today probably the markets are trading lower because of higher crude prices. Would you take a bet? Would you use this downfall to create a fresh position at these levels?
Very good afternoon to you, Navneet. Thank you for having me. Well, yes, but maybe this could drag on for a day or two more. So once again, I'll go back to selling the 10,600 put option. but for the 31st October ending, Navneet, because there isn't too much premium remaining for this month and this couple of weekly options. So the 31st October 10,600 put, because I still feel that 1078, 10,878 is important. Don't think that looks like breaking now. And we look like fighting and probably overcoming 11,078 in this series, heading towards 11,235. Yeah, it could take some time because the weekend development was slightly unexpected. But yeah, I would be more bullish than bearish on it.
Okay. Let's take a look at what stock ideas we have this afternoon and whether or not the play is more towards stocks than on the index. Ajit, let's stay with you. What are you recommending in terms of your individual stocks?
Divina, we are continuously maintaining this long and short approach when it comes to stocks. So today also we are continuing with the same bias. We have Britannia on the long side. After retesting its major support area of 200 EMA on the weekly charts, we have seen a strong surge, and from last almost 2 to 3 weeks, we are seeing a pause. So it's offering a buying opportunity. It has formed a pivot on the daily chart. In fact, we are seen a decent buying interest in today's session. So it could be an opportunity to go long in Britannia with 2630 as a stop loss and 2800 as a target. On the other hand, BHEL, which has been continuously underperforming the capital goods space, and it's still trading closer to its 52 weeks low. We have hardly seen any respite, and in fact, after the recent rebound, we have seen a downtick of late. So again, it's a shorting opportunity, is with charts are indicating. So with the stop of around 53, one can go short for the target of around 47.
Okay, got that. What about you, Heyman, on your stock ideas?
Yeah, I'll go for two longs, Davina. Firstly, a buy on LIC Housing Finance. I think it's deeply oversold. The indicators have turned positive. Yeah, it's going to take some time before it gets up, but yeah, I think we are due and overdue for a bounce back. So buy in LIC Housing Finance at 401, stop loss 394, target 415. Second is also a buy. It's on Grasim. Once again, it's a counter call. Hasn't done much. It spent almost 5 weeks doing nothing, but a distinct oversold situation. Crossover buys on the daily charts by the MACD and a bounce from oversold zone. Buy at 713, stop loss 705, target 729. Devina.
Okay, I got that. Let's bring in Gautam Shroff, Edelweiss Securities, is joining us on the show as well. Gautam, a very good afternoon to you. Let's talk about the big announcements that we've seen from the finance minister over the weekend, and what implications does it have for a sector like the real estate space, which has been vying for some government support to come in. Do you think it's been enough, and what would happen now to some of the bigger players that are listed?
Devina, very clearly, so sentimentally positive of what the finance minister came out and spelled out on Saturday. I think the key will be, how is that going to be implemented is what we want to watch. Implementing that and funding the last mile, as she says, with projects already completed 60% of the work and not being an NPA, not in the NCLT. So of course it will benefit more than 300,000 units across the country. Implementation could take anywhere between 1 month to 3 months or maybe more, and that is a key that we were looking to watch out for. So sentimentally positive, as I said, but yeah, it is an important step towards a structural problem in the country.
Okay, well, that's... Go ahead.
Question on larger players. So we are very clearly, of course, we like Godrej Properties a lot, Oberoi Realty a lot. Godrej is emerged as the pan-India player. Industry has consolidated, and the kind of rapid expansion that they have been able to deliver, 71 million square feet over last 3 years, the kind of sales they put up in the last year. So it is clearly a winner, and everybody, the brand is so well known that most people who want to form a JV or want to do a joint development usually are preferring Godrej as a developer, and that's where their pioneership in being one of that management development project organizers is kind of helping them a lot. And of course we like the name. Oberoi has a very strong brand name, very low leverage, has good annuity income, and hence we like both the large caps in the space.
Okay, and both the large caps definitely have performed better this year. Godrej Properties is up about 45% so far, and Oberoi Realty, one of the better players, has also given you probably some returns this year. That's up about 22%. Gautam, besides real estate, what's in focus today is the oil sensitives, be it the oil and gas stocks, the oil marketing companies which are trading lower on back of higher crude prices. We've also seen companies which so far were outperforming are today seeing some bit of selling pressure from the paint sector for the likes of Asian Paints and also something like Indigo. So all the oil sensitives have reacted negatively today. What's your assessment with the sort of increase that we've seen with regard to crude prices, and with the geopolitical risk still looming around? We don't know if it's going to stabilize around the current level. So how should one approach the space?
Again, Saudi Aramco, their official statement is expected later today in the day, and we want to believe that in few days time or probably a week's time everything will be normalized. So this spike in oil is probably more short term or more for immediate term that we're looking at it, and we want to believe that oil will come back and normalize soon. So we would want to go out and still buy the oil marketing companies. Having said that, I think they'll have to take 3.5 rupee kind of a price hike very soon, could be as early as today or tomorrow. And diesel demand is something that could be hit. Of course, petrol is kind of oil insensitive, that will continue, but diesel demand could see a bit of a tapering off for about a week or so till we continue. So in the pecking order, I think we like Indian Oil a lot, IOCL and HPCL. HPCL has a lot of marketing leverage, and BPCL we of course like from the point of view that probably could be disinvested to a strategic player which could kind of take it to new highs or even much more. So I wouldn't get perturbed by this temporary spike in oil and continue to buy OMCs with of course a medium term point of view. Okay. I think you also asked me on the paint companies. So Asian Paints and Berger Paints, I think 70-80% of their volume comes out of decorative paints, unlike Kansai Norolac, which is like 50% decorative, 50% auto. And despite all the slowdown and the lull in the markets, both the companies have kind of delivered double-digit growths. We want to believe that of course there is some money being taken off the table because both have done very well in excess of 20-25% this year, but for the longer term point of view, for a 7 to 10 year point of view, I think these are two companies which will continue to grow in volumes and are very well managed. So with a longer term point of view, I wouldn't be perturbed even in the paint sector.
Coming back to you, Gautam, I just want to get some chart checks going. And since we were on the topic of these oil marketing companies, both HPCL and BPCL have seen big cuts in today's session. I think down about 6.5% odd. Friday session saw BPCL moving up on the back of news of privatization, which has been, management not denied it, but they've said that they don't want to comment on any speculative news. Stocks are down about 7% in today's session. Heyman, BPCL or HPCL, anything?
No, I think, Devin, after the gap down opening, I think there is more pressure in BPCL. But, after this sharp move, I'm not sure if it quantifies as a fresh short. Yeah, on a bounce, yes. There is this bearish gap which it might make an attempt to cover up. So, I'd be more comfy shorting it on a bounce, not currently.
Okay. Ajit, today's more defensive play stacks up in the form of IT, and you've got some FMCG stocks doing well. Pharma on the back of what the currency has been doing. Any near-term trades that you see in any of these sectors?
So, Devina, Dabur looks very strong on charge. We have hardly seen any move also. If talk about Colgate Palmolive, we have seen a very strong surge. So, in case if it witnesses some profit taking and decline intraday, then definitely you can consider. But Dabur looks very strong on charts. Pharma, I still feel that one needs to be very selective in this space. Divi's looks okay, and Dr. Reddy also one can consider in case if you have a medium term. But the short term view, it will continue to trade sluggish. IT, I still feel that after the strong surge, it will take time to consolidate. So I feel FMCG is the best bet in case if somebody wish to initiate anything for the short-term perspective.
Mm-hmm. Okay, Gautam, just while we're on this topic, and we've seen how these companies have grown, we've seen how much stability they've provided in a very uncertain and volatile market. Would you be, more sanguine about continuing to invest in FMCG per se, even though valuations are stretched, but the comfort that they provide in volatile times like this is far better than any of the other high beta names?
Devina, I think the consumer space is clearly something which is far more consistent in terms of security of the trade, in terms of the price and the growth that they offer. So we all know that this year has been a challenging year, and a lot of government spending kind of has just started some time back. Earlier part of the year there was hardly anything seen there. So we want to believe that given the rural demand will pick up and the urban demand, of course, there is a slight hope in when I'm saying that on the urban side. I think I would continue to buy the FMCG names more from the safety perspective. At least there's growth, and I would be, of course, selective in being with the large caps there.
Okay, that's about the FMCG space. In fact, Godrej Consumer also, after a while, is seeing some bit of gains today. That stock, I think, throughout the session has managed to sustain the gains, and it's after a while, by the way, this counter has gone up. I mean, on the charts, 638, it's not given you returns this year. I think it's one of the top losers also in Nifty FMCG index. Is the bounce back good enough to create a long position?
From a very shorter term point of view, Navneet, yes, because we've overcome the 55-day exponential moving average. Indicators remain in buy. NSE cash market volumes are at 15 lakhs at a 5-day high. So yes, I believe we are heading towards 650 or more. But this would be a shorter term trade, because between 655 and 660, no need, there is a swing high intermediate top. So okay, 638 and 650 is still a tradable range and enough gap on the upside to make. But yeah, a shorter term trade, yes.
Okay, that's Godrej Consumer for you. Technically, Hemant suggests a shorter-term trade can be taken. Let me just highlight a few gainers. Your graphite makers, both HEG and Graphite, are up and about. Remember, once again, these are beaten down counters, but they've rebounded very sharply. HEG is locked in upper circuit with gains of 20%. Graphite also seeing good gains of about 18 to 9%. Even Rain Industries has seen some bit of recovery in today's session, so that's also up about 8% in trade. On Mobile is the other one where the promoters have informed the exchanges that they are looking to sell some stake to a company which at around levels of 70 to 73, and the current price is 39. Probably that's the reason why the stock's being locked in upper circuit. On the losing side, we've been highlighting how small finance companies have been under pressure today. In fact, Equitas being the top F&O loser as well. Though it's recovered from the lower levels of the day, it did touch lows of 98, 97. Currently, it's trading at 102. Ujjivan also following the move, and that's trading with cuts of 5 to 5.5%. Gautam, the reason why Equitas has had a gap down opening today, probably traders taking fresh short positions, because SEBI has rejected their draft scheme which they had submitted for listing, and now the only option open for them is go through the IPO route, which would mean bigger discount for the holding company which is listed, and precisely that's the reason why the stock's been trading with bigger cuts. For the existing shareholders of these companies, what would you advise them?
Devina, I think, as you said, IPO is inevitable now, and whenever that happens, maybe February or March, if I was a shareholder in Equitas, first of all, fundamentally Equitas and Ujjivan both are doing fine. There is no business problem per se. This is a technical thing that, they have to go and take the IPO route. But for existing shareholders, the question is, why would they want to buy or hold a holding company when you really know that the growth is in the small finance bank, which is probably a few months away or 6-8 months away. So everybody would want to go and buy the small finance bank and not be invested in the holdco. Having said that, I think given the reaction in the price, a lot is already in the price. I would put another 5-7% at risk at the most. I think that is a price risk that remains in the counter and nothing more than that. And sooner or later, as fundamentals shape up, as the sentiment revives, I think this can see a little bit of bounce back, in fact.
We were just talking about ITDC just a while ago, and how this stock has actually moved up 71% in the last 7 days. In today's session also, the stock has been up closer to about 5.5% trading at about 281 odd. Remember, it was around these levels sometime in the month of June, where it was closer to 258 odd. But in the last few trading sessions, it's taken down all of its daily moving averages. So from a technical standpoint, and this too on the back of extremely heavy volumes, which are much, much higher than the last few days average. In fact, we've not seen it hit and clock these kind of volumes since February of 2019. Hemen, you know, a little difficult to gauge, but the last few days it's just been on a roll.
2217 and 13 and down to 160. Devina, frankly speaking, all of them have been battered badly. So, to be honest, I mean, I think Navneet spoke about, or you spoke about HEG, Graphite. I think all of these guys have been almost 1/5 or 1/10 of the prices were. So, I think such savage jumps, not unexpected. Sustainability, I'm not very sure. Technically, everything looks very nice. Oversold, positive diet, like you said, tremendous volume. I mean, you don't expect cash market stocks to have such volume because something will end in delivery. So everything looks hunky-dory. Is there follow-up buying? Is there a general turnaround in the mid-cap, small-cap? I'm not sure. But standalone, it looks good. Fresh position, 290 was the intermediate high. That was the high, intraday high today. So, and if the stock moves from 160 to 290 in 5 trading sessions, that's there.
Okay, Gautam, are you, you know, more on the camp of starting to look at mid caps and small caps in a big way? Last week, when we did see the index on days that it did falter, there was always this tinge of outperformance by the small cap index.
Small cap, mid cap, I think do deserve a bounce back, and you know they were battered out of proportion. I think there was too much of fear, and it was at the peak of pessimism. So that's why we've seen the bounce back. I think if I have to kind of play these markets or invest in these markets, I would probably go and look at a few large cap two-wheeler automobile company names, and that is something that we were underweight on, and we want to now bring it to equal weight, if not overweight. And I feel there can be a good amount of money to be made on the two-wheeler space, especially Hero MotoCorp, Bajaj Auto, and Eicher Motors in the pecking order. We like that space, and I would put my money in.
Okay, that's the view coming in on the auto space. Gautam, we'll leave it at that note. Thanks a lot, by the way, for joining us and taking us through your views on the markets and also the individual sectors which you highlighted for us. Nifty is still below the mark of 11,000. Remember, 10,967 or 68 is from where we did see some bit of buying. That also happens to be the 20-day moving average. So on closing basis, I think these two levels will be keenly watched out. And Bank Nifty is now down almost 200 points in trade. But a few stocks which are still holding about. Let me just pull up Titan. That's the top gainer, by the way, right now. Nifty, it's sitting at levels of about 1142. Ajit, on the charts at current levels, would you advise taking any fresh position on Titan?
So exactly, see, we have seen a very strong consolidation, and today we have seen a breakout, fresh breakout. So that indicates the possibility of this rebound or this breakout to extend further, and the gap that stock had a couple of months back is likely to fill that gap. So considering that, definitely one can initiate fresh longs, and for that 1120 should be a stop loss, and closer to around 1200, 1210, that should be an immediate target area.
Okay, that's Titan for you. And besides that, of course, ONGC, that's the upstream company, probably stands to benefit with regard to higher prices. Jubilant Foodworks is also up and about. That's seen gains of 2%. And you've got stocks like Tata Elxsi and Kajaria, which are bucking the trend in a falling market like today. So all of them have seen good gains right now. But Kajaria is up about 1.5%. Let's move on and talk more about the Indian markets. Drone attacks on Saudi Aramco's facilities have stoked the embers of global volatility even further. Earlier today, Jyotivardhan Jaipuria of Valentis Advisors spoke to us on how he is assessing the likely impact on Indian markets because of this. Listen in.
Crude oil has become like a black swan event, which was something which nobody was counting on, because this was the week where the focus would have been on the Fed, and the general expectation was Fed would cut rates. So the way we were looking at the construct was most of the central banks globally are cutting rates or easing liquidity, and that was one thing which we were factoring in when we were doing the markets. Now obviously with this crude, what you get is you get risk on inflation, at least in the short term, till the oil production comes back from the Saudis. and that's something which at the moment nobody knows how quickly this could come back. So it could be like this is a temporary blip and we get the production coming back quickly and things settling down back to normal very quickly. But in the near term, the inflation risk has gone up for central banks across the world.
So what does that do in terms of the anticipation from the RBI in the month of October? And also the fact that, you know, if we do see slightly prolonged pressure for crude oil, it could negatively impact the currency, which in turn negatively impacts equity markets, because the FIs, which have been sitting on the sidelines up until now, will add another reason not to come in.
Yeah, so you know, for the RBI, at least the good thing is there's still some time before the RBI meeting comes through. So by then, you know, you'll have a bit more idea of what Saudi is saying in terms of their production, how quickly that could come on stream. But immediately, like the Fed is on Wednesday itself, so the Fed has to take a call whether they are comfortable with inflation or they want to defer the meeting. Going into the Fed meet, the expectation is that they're going to cut. So the general consensus is we have a cut coming from the Fed. I don't know if Fed decides to take this oil as an excuse and say we, you know, defer the cut and we wait and watch. But otherwise, you know, till Friday, like everybody was bang on that Fed is cutting. You know, we've seen ECB cutting. We've seen the Chinese central bank also easing liquidity. So in some sense, we had a scenario where, you know, there was some sort of, it was not probably a coordinated move, but at least all the central banks across the world were starting to ease liquidity and cut rates, which were obviously is trying to compensate the fact that there's a slowdown in the world globally.
Right, Jyoti, well, these are volatile times, and naturally this may be a good hunting ground for unloved and undervalued opportunities. What areas would they be in your opinion?
So, you know, we've been like, you know, looking at some of these sectors which have underperformed a lot and where we think over the next 2-3 years we could see things pick up. So one of the focus areas for us has been government spend and where the government can really improve their spending, so we could see some growth coming through. We have been looking at select capital goods. The other area we've been focusing on is cement, because, you know, that's where we think demand pickup will happen and so pricing power will come through. If you see, raw material prices were actually coming down all this while for them, so they were getting a benefit of prices going up, at the same time raw material prices coming down, so EBITDA per ton margins would increase significantly over the next couple of years.
All right, that's Jyoti Jaipurya there of Valentis Advisors with his views on the markets. But in the meantime, before we move on, I just want to quickly take a check on what's been happening with the other global markets and what's been the big trade in Europe. Then we take a look at the turnover. And also, what's the take on the advanced decline ratio? If you could just get up the European screen, we'll tell you all of the indices out there are trading with cuts. So about 0.5% under for the CAC, the DAX is under by 3/4. FTSE just about stable with the marginal 0.1% cut coming in. Turnover, remember the last few days, the cash market turnover has been subpar. In today's session, the NSE cash is just about 25,000. By the end of trade today, within the next 25 minutes, you'll probably end up seeing a number which is sub 30, closer to about 30, but that's about it, nothing more than that. NSE F&O is about 9.5 odd lakh crores. Well, let's move on and find out what has made it to Sharad Dubey's list of Fab 4 stocks for the afternoon. Sharad, good afternoon.
Good afternoon, Devina. The first stock which has made it to the list is Texmaco Rail, which is up almost more than 3.5%, its highest in almost a month, after the board sets its rights issue price at around 46 rupees and 70 paise. So the company is going to raise around 200 crores from this exercise, and the rights entitlement ratio is around almost 19 shares for every 100 shares, with the record date being set at September 25. Up next, in the graphite electrode space, we are having Graphite India, which is in the almost 19.5% up, and the stock has risen almost 8 for the consecutive 8 trading sessions and almost 35% over this period. Up next, you are having Timken India, which is up almost 5%, hitting its 52-week high. And the last stock of the day we see is Suven Life Sciences, which is going on higher volumes, is up 6%, with volumes coming at 17 times its 20-day average. Back to you.
Right, Sharad, thanks very much for that. So those are the Fab 4 stocks of the day. I just want to quickly look at a few other stocks, and Sterlite Tech is one name. 149 on the stock in today's session. Also, the stocks moved up about 5.5 odd percent. The stock in the last 1 month, maybe not even a month, less than a month ago, you saw the stock making lows of closer to 102. From there, it's almost a 45% increase. The last 7 days itself has seen the stock move up closer to 30 odd percent. Ajit, do you track Sterlite Tech?
Not exactly the winner, but yes, what I can see from the charts is that the stock has rebounded very sharply in line with what we are seeing in the other small cap stocks. So, but 157 to 160 is going to be a very critical zone for this uptrend to continue. So, in case if you're having any luck of buying the stock at the lower levels, so one should book profits closer to around 160 and see whether the stock sustains above this level for 180 levels or not.
Okay, that's Sterlite Tech. The other stock which is falling in trade is Liberty Shoes. That's down about nearly 8 to 9% as we speak, and the volumes have also been decent enough for the sort of fall, at least volumes compared to the average volumes of last 20 days. On NSE, it's about 1.8 lakh shares so far have been traded. Any thoughts technically here? Amen.
I think all of them are going through bouncing symptoms. No need 350, 80. 80 to 134. I believe this is going to be a small cool off, but at least from a slightly medium term point of view, Navneet, things seem to have improved. We've seen, I think, almost 6-month high volumes in the last week, not delivery, but gross volumes. And there was a gap between 110 and 106, bullish gap. Normally gaps have a tendency to get covered. I think that's what's going on. So this spike from 82 to 134 in 5-7 trading sessions was too sharp to sustain. We'll cover up this gap, consolidate and go up again. So the medium term picture has improved, and yeah, post this gap cover up, I think we can expect resumption of the upside. How sustainable it's going to be, I'm not sure, but all of them have been beaten very badly now, Neet. So I think somewhere there had to be some relief rallies coming in. That's what we are seeing right now.
Today seems like more of a profit booking because it's rallied almost 40% in the last 7 days. That's Liberty Shoes at 117. Market's still above right now. Nifty is at least trading at above the mark of 11,000. Let's bring in our next fundamental guest. Parthiv Shah of Tracom Stockbrokers joins us on the show now. Hi Parthiv, good afternoon. Thanks a lot for joining us today on Countdown. Third tranche of measures announced by the FM on Saturday in order to boost the economy, but so far whatever measures have been announced, nothing seems to be providing that sort of fillip either to the flows from the foreign investors or with regard to how the markets have been behaving. What has your assessment been so far, the sort of measures that have been announced?
Good afternoon. Thank you for having me on the show. See, I think firstly, we'll have to live with the fact that there is a sort of a trust deficit in terms of at least the government has now started to acknowledge that there are many pockets in the economy which are having a lot of trouble, and they're showing some sort of willingness to acknowledge that, and they've also given the SOPs. But I think certainly there is some sort of trust deficit in terms of how well the execution could be. Say case in point, one of the SOPs that they talked about is trying to refund all the pending GST cases within 13 days or within 30 days, and post which any new dispute which arises in terms of the refund within 60 days. So I think markets will have to see how well this is executed. Even things about the money that they have asked to set aside for in the real estate sector for people who are not related to any of the NCLT related cases or having defaults, I think they will get that last mile funding. Sounds very good on announcement, but how well that will get executed and how well that lands up clearing a lot of pending inventories is something probably now the markets will want to see the action front, post which I think we might see some sort of a reaction. So I think they certainly don't have a magic wand. Things in many pockets are a little difficult. The funding, especially, there's still a lack of clarity in terms of how will the NBFCs, which once used to support many of these sensitive sectors like real estate, will come back strong. But overall, our sense is that I think a lot of negative sentiment is getting priced into many pockets in the market. And this probably happens to be a very good time where investors can rejig and rebuild their portfolio for a longer horizon. Couple of reasons why we are very bullish on the longer horizon. The monsoon has been pretty good and pretty kind, which certainly bodes well for the longer horizon. And more importantly, knowing the fact that 50% of labor force is in rural, that part of the economy should start kicking in. And secondly, we know for the fact over the next 6 months, the cost of funds for most of the industry would start coming down because of the lower inflation. So these are the two positive stimulus measures that I feel could be a good reason for investors to be bullish on India for the longer horizon.
Okay, just want to take a look at what's been happening to Tata Elxsi as well. Remember, we spoke about this stock and how this stock probably in the IT space is the only stock that's probably missed out in terms of the move. Stock's at about 662. The last 7 days performance will come up on your screen. Today's session though is managing to play well. Some amount of catch-up that's come back in the last 7 days. Stocks moved up about 8% but stocks come off also significantly. In the month of July, from levels of about 870, the stock's trading at closer to 661 right now. Ajit, do you track Tata Elxsi?
So yes, Devina, in fact, when it made low, it tested its monthly support area. We recommended to go long, and after that, we've hardly seen any kind of a rebound that we were anticipating, like we had in Tata, that Tech Mahindra counter and the other IT counters. At current levels also, I feel that it's still struggling, and the risk to reward ratio is in the favor of 1:1. So in case if somebody is okay with that kind of risk to reward ratio, then definitely one can consider fresh longs at current levels. 640 should be a stop loss, and closer around 680, 85, that should be a target area.
Okay, that's the technical view coming in on Tata Elxsi. The other one which has moved higher in trade is also Page Industries. That stock's up about 3% currently at 19,381, and as you can see, the gain, the increase has just come in the last 5 minutes of trade. Very quickly on the chart, the 4% move that has just come in on Page Industries in last 5 minutes of trade. Would you use that as a buying opportunity?
Yes, breakout came in today. 7% long build up, rounding bottom, breakout was 18,800, some more upside left. Yes, long.
Okay, that's Page Industries. Parthiv, stocks like Page Industries, Colgate, Godrej Consumer, we are seeing some bit of buying now coming in. All of these have been battered down in the recent past. Any of these stocks where you foresee growth prospects to be better in the coming days?
Certainly, Navneet, you're absolutely right. These are the stocks which have really kind of come off a huge amount from the 52-week highs. And pockets like Page Industries, where I think no doubt post GST, there were a lot of problems in terms of their distribution channels not being able to cope up with the new processes. But I think that's more of a transition integration sort of an issue. It's a rock solid plan. And more importantly, rather than looking at the current trail multiples, I think it's best to look in terms of the opportunity size that it brings with both the brand Speedo and Jockey. And it's just a 3.5 billion sort of a market cap right now. It has all the ingredients and potentials to really scale up in a country like India. So certainly long-term investors should look at a company like Page Industry. Even talking about Colgate, I think this has been a very silent or docile sort of a stock which has done nothing. But now it seems that the management is trying to work all the gears in terms of trying to revamp the volume growth, try and increase their market share, and all the talks regarding Patanjali's competition is certainly ebbing. So in which case, should board extremely well, and they can show that volume growth back. They are always done very good in terms of the cost controls and margins. Then I believe there's a case for this company to get re-rated.
Okay. Got that. Parthiv, just stay on with us. Lots more to discuss with you as well. It's time now to take a look at what dealing rooms are recommending this afternoon. Yatin Mota and Darshan Mehta, they are here with their channel checks. Good afternoon, guys. Starting off with you, Darshan.
Yeah, so one of the stocks that's been spoken about today and is doing well in a rather weak market is Colgate. It's up almost 5%. Over the weekend, the new management met a lot of analysts, gave a lot of positive commentary, the biggest being they now intend to gain back market share that they had lost. The other thing is that the strategy that they gave out to analysts indicated positive responses to the brokerages, which also came out with positive notes. So on the back of that, there is strong demand that is seen in Colgate. So that's one of the stocks that's been spoken. The other counter which has managed to rally significantly is Wockhardt. It's risen almost more than 40-45% in the last few trading session. The dealing rooms are abuzz with the rumors of any kind of M&A activity that could be coming in, but the volume with which it has moved up, and remember this is not an F&O share anymore, so there is genuine volume that's happened and it's moved up on very heavy volumes, does indicate that there could be some bit of potential M&A or some bit of corporate announcement that could come in. And two stocks which have fallen significantly, Equitas and Ujjivan. Now Equitas, the RBI rejected and all the commentary that came out rejected in terms of they will have to now go in for an IPO. Ujjivan already had indicated that they will go in for an IPO because for their small finance bank. So the holding company discount will widen, and that's what a lot of analysts have also pointed out. So there could be more potential downside, is something that dealers are betting on. But Yatin, what are you hearing?
So Aurobindo Pharma is one stock which is bucking the trend, and in general defensive stocks are doing well in terms of FMCG and pharma names. Dealers on the basis of FNO trends are recommending a buy today, sell tomorrow kind of a strategy on Aurobindo Pharma. Also watch out for DLF. Last week the stock was quite active. However, given the overall global setup and the high beta nature, HNIs are said to be unwinding the long positions in the counter, and probably that is the reason why it's under pressure. 3% down for DLF on volumes of over 1 crore shares. And finally, we have Balrampur Chini. Remember last week the government announced various SOPs for the sugar sector, and the shares of Balrampur Chini went up substantially higher. This week also, the overall setup is strong according to dealing rooms. And dealers do indicate that on the basis of technical trends, there could be some further trading upside as far as Balrampur Chini is concerned.
All right, thanks very much for that, Yatin. Parthiv, how closely are you watching the sugar space?
Despite all the talks about the ethanol policy and the sugar sector looking like a sort of a turnaround play, we have always avoided this sector, because any sector where at times, and not at times, I think most times, where government intervention is required and which becomes like a make or break for the sector, has really not created a lot of value. No doubt Balrampur Chini is one of the best stocks fundamentally, along with likes of EID Perry. But if you see these stocks over the cycles, haven't really rewarded investors. So I think we would avoid this sector altogether.
Okay. Avoid sugar as a space. But is there a trade there in any of the names? We've seen, we see pretty gyrated moves in some of these sugar names as and when there is news flow surrounding them. Balrampur Chini, if at all. Ajit?
So, Devina, yes, we may see further uptick in the stock, and it can test the level closer to 160 to 165. But since we have better names to trade in, because earlier also we have discussed on this show that those stocks which are trading closer to their 52 weeks high and have a very strong pattern, stock like Marico, Voltas, Power Grid, these are counter where definitely one can consider fresh long instead of trying their luck in a stock like Balrampur or Renuka.
Okay, we did mention about HDFC at the start of the show, especially on the future side, where some bit of fresh short build-up has been seen. And not only that, the stock, which is a heavyweight on the Nifty, which is dragging Nifty lower today, is also moving towards its simple 200-day moving averages, which is somewhere about 2039. And currently, the stock trades at 2047. I mean, looking at today's action, 14.5% higher in terms of open interest. It is showing that there are some fresh short positions being taken. What sort of levels would you be watching out on the downside?
I think closer to 2020, Navneet. 2023 was the swing low on 6 September. I think that could crack once. And if that happens, maybe another 20-30 points. I wouldn't be too bearish beyond that point, Navneet.
Okay, so that's the technical view coming in on HDFC. Parthiv, the oil marketing companies are under pressure today, and of course, we know the reason because of higher crude prices. But tell us what sort of a headwind it is right now at a time when both diesel as well as petrol prices are already deregulated.
See, we've never liked the OMC bets either for investments or for even a position trade. But just to talk about the impact, no two ways about it, the oil spike, and in most cases, whenever historically we have seen oil prices spiking, and a key will be how sustainably they stay elevated, and when the supply again comes back, because they're also going to talk about releasing their strategic reserves, which could again bring in some supply. But I think these OMCs tend to overreact at times on such news. It'll be very important to see what positive impact it also brings in terms of their current refining capacities, because all of these oil marketing companies have decent size refining capacities, which should benefit with any such oil disruption from the Middle East. But nonetheless, I think the best case for these OMCs becomes if at all the government were to fully privatize it or sell it to some foreign player or some domestic player. And under the hands of the government, we have hardly seen these companies create any major value. So if at all the chatter regarding BPCL being privatized comes true, then probably I think this stock would create a lot of value. But for now, seems like a wishful thinking, but that's the only reason why one would like to bet on such a name rather than, I think, betting regarding the oil price movement.
Well, BPCL, by the way, has already given up all of its gains that we saw on Friday when the stock surged post Bloomberg reported that the government may look to sell its stake in the company to a global player, which is somewhere about 40. The government stake is worth about nearly 45,000 crore. Parthiv, I'm just staying on with this space. Then the upstream companies, which tend to gain with the prices moving higher, if the crude prices were to remain where they are, and with the geopolitical risk looming around, if they scale higher, do you see any sort of EPS upgrade then coming in for stocks like ONGC or, for that matter, Oil India?
Many credible institutional reports talking about ONGC and Oil India, the government PSU upstream companies, being one of the world's most valued, undervalued, or least expensive upstream companies. But again, there's a reason why these companies stay at these valuations and are not massively re-rated, even when you've seen oil spiking up to levels of 80, 85. Because there's always this problem about, or for that matter, the fear of the market participants that whenever these companies tend to generate higher amounts of free cash flow, a huge chunk of it does not go into, again, capex for new exploration blocks, but it tends to go to the government's kitty via a big dividend or a buyback. So, or maybe an M&A activity like what we saw happened with HPCL stake being bought by ONGC's reserves. So that's the key reason why these stocks don't tend to entice us in terms of having any sort of thesis for long-term portfolio investment.
I should pull up Maruti and M&M as well. Some flashes from Cogenesis saying sources suggesting that Maruti has upped discounts on cars by up to 30,000 rupees. M&M has upped discounts on cars, some cars, by up to 20,000 rupees as well. So these are some stocks you need to keep in mind. Nonetheless, we've just heard about M&M and the no production days in their farm and tractor segment. About 8 to 17 odd days is the no production days, and others as well. SML Isuzu, and you've seen Maruti announce that. So it's not looking all that great for the auto space nonetheless. Parthiv, a quick comment?
See, I think it's not a bad idea to try and heavily discount and clear off your inventories. This is certainly going to have a negative impact in terms of the margins and the numbers that would be there for the next couple of quarters. But I think before the fleet of Bharat Stage 6 vehicles is there, I think it's certainly not a bad idea to heavily discount. That was, I think, a lot of chatter regarding why many of these automotive companies not heavily discounting, trying to incentivize a lot of buyers who are maybe on the sideline and trying to avoid the buys until the new fleet of Bharat Stage 6 vehicles comes. So I think we are not surprised. This was something which was expected, but maybe they tried to time it very close to the festival season. And hopefully with such measures, if they're able to kind of deplete their inventories, then probably I think there will be a lot of interest re-emerging in these stocks with the potential of their long-term growth story.
Okay. Price cuts coming, or rather discounts being offered ahead of the festive season, and this was the chatter where a lot of the market experts were saying maybe the demand for these auto companies could revive in the second half when we kick in the festive season. As Parthiv highlighted, maybe to clear off the inventory now, higher discounts are being offered. But few minutes to go for markets to shut shop. Let's quickly get you some closing strategies from our technical experts. Let me come to you. Any BTST or any STBT for tomorrow's session?
I wouldn't want to give a STBT despite apparent weakness. I think it would be a BTST, Navneet. So I think something like a Bosch would be a BTST, Navneet.
Okay, a BTST on Bosch stock, which is up about 1% in trade. Ajit, your closing strategy would be?
I would prefer to go along with the Titan at current levels. We have just discussed about this stock also. So the kind of momentum that stock is showing and the kind of breakout that stock had witnessed, we feel this rebound will extend further. And for a very short term also, 1170 to 1180 should be a target area, and 1130 should be a stop loss.
Parthiv, before we thank you, we've seen a sharp recovery in the broader markets in the last 13 to 14 sessions at least. They've, for a change, outperformed the benchmarks. Is there any investment idea that you would like to share with the viewers from the broader markets?
One sector where we are very bullish on is agri-related theme. And again, I reiterate, we are extremely satisfied with the monsoon spread and how well the reservoirs are back to decent levels. And this should certainly benefit a sector which has been lagging since the last 2 years and where there's a lot of under ownership, which is basically domestic centric agrochemical themes. And case in point, I think we are trying to pick in the best quality names. And one of the stocks that we like is Bayer Crop Science. Here, I think they are very, very innovative. They are innovators. They are not like having generic play. They are having innovations where in terms of herbicides, fungicides, pesticides, they have a lot of good products, innovative products in the pipeline. They're doing a lot of ground related work in trying to enhance the farmer's knowledge. And more importantly, even in the hybrid rice seed, where they have market leadership, I think they are also going to launch few more products. And along with all this, Monsanto's expertise in terms of genetically modified seeds. So capacity of Monsanto along with Bayer Crop Science, I believe this is a great investment for long-term investors. And with good monsoons, we'll again see the demand for these products to revive and we'll see better results. Balance sheet wise, they are rock solid and certainly good long-term plays.
Okay, Pratib, we'll leave it at that note. Appreciate you joining us this morning and taking us through your views on the markets. Just a few minutes to go, and Britannia is at day's high. Pull up that stock. It's seen gains of about 1.5% to almost 2% right now. 27.22 MN. Would you take a bet on the long side on Britannia?
Yes, I think so. Was looking good. Is looking good. Heading towards 2760 and 2800 now. So yeah, price long.
All right, we'll take it from that and we'll just stay on wrapping up the markets for you this Monday afternoon. And we've seen a cut on the indices, about 0.5% under for the Nifty 50, just about holding on to 11,000. You still have a few minutes left to go, so I don't know whether the close will be under that or no. Nifty Bank continues to look weak, and today's session has been particularly weaker for the banks there. So it's given up about 258 odd points. Sensex is down about 259 points. Taking a look at the mid caps and the small caps, small cap index up until now has been the joker in the pack, where the outperformance has been pretty stark on days where the markets have fallen, as well as in days where you've seen the index move up. It has outperformed the index. In today's session too, it beats the market just about flat versus the dip of 0.6% on the Nifty 50. Mid-cap index also is just down 0.25%. Coming to the movers and what's been contributing to the index, on the upside, you've got gains in a Titan, which is the top performer of the day. It's up about 2.3%. Following that is Britannia, so some defensive play coming back in. IT as a pocket is doing well. Pharma is doing okay. So Sun Pharma is up about 1%, but you don't have really big bang gains to show for. In terms of losses, BPCL, a big sharp cut of about 7.5%. Autos as a pack look weak, so M&M's down about 2.5%. Production, no production days, 8 to 17 odd days. They've announced it. SBI is down 2.5%. UPL, Indiabulls Housing Finance, Yes Bank too looking weak, and then you've got the likes of IOC, which is down about 1.5 odd percent. But the broader market space, Navneet, and slight outperformance versus the index.
That's right, Davida. There was a slight outperformance when it comes to the broader markets. And a lot of beaten down stocks today were bouncing back. And to start off, you had the graphite makers from the likes of HEG and Graphite. Both of them registered stupendous gains. So HEG closing around with gains of about 16 to 17%. And you also had Graphite, which witnessed a tremendous buying interest today. And that too is closing with gains of about 17 to 18%. The other one, which was locked in upper circuit, was on Mobile after the news came in that the promoters are looking to sell their stake at a higher price to current market price, somewhere about 73.74, and the current price after the upper circuit was about 39 today. Colgate-Palmolive surged on back of the commentary which came in from new management, where they highlighted that they will be looking to gain back their lost market share. Probably the street took it very nicely. In fact, the gains today were the strongest that we've seen in the last 9 days, even last 9 months, pardon me. Even on the futures side, there were a lot of fresh long positions seen here. GIC-RE surged today, so good buying interest seen there as well. The stock's closing with gains of 4%. Page Industries in last hour of trade witnessed some buying interest, and that stock rallied about closer to 5%. Also something like Phillips Carbon, the stock which is down about 35% so far this year, saw some recovery up about 12%. On the losing side, the small finance banks were under pressure, so Equitas down about 12 to 13%, though it's closing off the day's low. The low was somewhere about 96, but still there was heavy short spotting seen on the future side for this counter. Ujjivan also down about nearly 5 to 6% in trade, and the oil marketing companies were under pressure because of higher crude prices. So HPCL was down. Also, the other oil sensitive like Indigo, that saw some selling after touching fresh highs last week, and Liberty Shoes, a counter which rallied almost 40% in last 7 days, witnessed some profit booking today. On higher volumes, this counter fell by about 7%.
All right, we've got the close of the session, and it is under 11,000 for the Nifty 50, and it'll come up on your screens. Nifty banks down about 268 odd points, and the Nifty 50 closes shy of 11,000. 10,993 is where it's closed at. Taking a look at the contributors and the point contributions and where the losses and the gains have come from. TCS, Titan, Tech Mahindra, ONGC, and on the flip side, big losses in Reliance, HDFC Limited, big heavy weights there, tilting the balance in favor of the bears.
All right, and looking at the broader markets, the market breadth, which has been improving in the last 5 to 6 trading session, and as we were highlighting, there was a bit of outperformance. So at least towards the end, it was in favor of the advances. And today, with markets falling because of higher crude prices, you did have the volatility also spiking up. So India Volatility Index today saw sharp gains of about 5 to 6%, closing with gains about nearly 6%. Devina.
I think in the last factor would be the turnover, to see how that is spanned out in terms of participation. So just shy of 30,000, about 29,300. There you've got it. It's been subpar over these last few days, thin on volumes. On the futures and options side, we've crossed 10 lakh odd crores. We have our technical experts with us. So quick closing comments. Ajit, let's start off with you first.
So, Devina, I would keeping a close eye on Bank Nifty tomorrow, because in case if it fails to hold above 27,750 levels, this level of around 10,800 is what we are eyeing in the Nifty is going to come soon.
Okay. Heyman, what about you?
I think maybe a day more of somnolence, so to speak, Devina. We've had a move. It's sort of, taking a small breather. I still say 11-2 and more in the current one.
Okay. Got that. Gentlemen, we'll leave it at that. Thank you so very much for joining in, Ajit as well as Heyman. Thanks for taking out the time. And on that note, it's a goodbye from Navneet, myself, and the entire team that's put this show together. Thank you so much for watching. Market Wrap comes up next.